What is going on, everybody? Welcome back to the channel. And in today's video, I want to give you guys a quick market update as we do have FOMC later today, which is likely to cause a whole lot of volatility. So I wanted to give you guys a quick update, show you some new key levels that I'm watching, because as you guys know, we are seeing a bullish pattern form on the higher time frames. It's a descending, broadening wedge, which does oftentimes break to the upside more often than it doesn't. So I want to kind of talk about if this pattern is going to play out and what levels we need to break above in order to see that. And then I also want to talk about the key levels of support if we are going to get a little bit of a pullback here, because Market Cypher is showing some potentially bearish signs. If we do get that move down, where are those key levels that I'm looking at? So I want to take a look at a little bit of a new range today with you guys, give you those key levels. That way, if we do see that volatility come in with FOMC, which is somewhat likely, you guys can be prepared. Whether the price rips or dips, you can have those key levels on your chart to know where you should be looking for your next trades, as well as the likelihood of the move up or down. So without further ado, guys, let's go ahead and jump into the charts. We'll talk about the key levels. We'll talk about that little pattern that I mentioned, and then we'll take a look at Market Cypher, and I'll give you guys an idea of kind of what I'm expecting next here out of Bitcoin. Let's get into it. So, guys, here we are on the Bitcoin chart, and I'm actually going to remove this little range that we have here. We'll bring that back up in just a minute, but as you guys know, a lot of people are looking at this pattern forming in this kind of upper range that we're seeing, and that pattern is a descending, broadening wedge or megaphone pattern, whatever you want to call it, but this is typically a bullish reversal pattern. It does break up more than it breaks down and could potentially give us that bigger breakout that everybody's looking at, and I am looking at this as a potential scenario. However, there are also some bearish signs on Market Cypher B, so we are in a little bit of a sticky situation. I'm also in a little bit of a scalp long right now, so I will go over that as well. But if we go ahead and come up to some of these higher time frames, you guys can see on these higher daily time frames, we are still seeing money flow trend to the downside. This is something we've been looking at for quite some time. As we know, when money flow comes out on the higher time frames, it does indicate that even if you get another push to the upside, like we did here when we bounced off of about $53,000, these sometimes can be just retracements to put in a macro lower high before getting another dump to the downside. Now, at this point, I'm not necessarily looking for a break of the $53,000 level. However, as you guys know, when we were retracing to the upside here, there was a very key level we were looking at, and it was that Fibonacci golden pocket 786 retracement of this entire trend to the downside. And one of the levels we were looking at a rejection at was this 786 Fibonacci retracement level, which also had confluence with a weekly horizontal. And this is potentially, if we are going to see a rejection, this could be a likely area, even though we've already kind of pulled back from it. You know, this is still a little bit of a key level to get above, right? Because if we are going to invalidate the lower high here, because when a lower high comes in, guys, it oftentimes comes in between that golden pocket and 786 Fibonacci level. And, you know, this is generally where I'm looking for rejections, whether I'm looking at the 1 minute, the 5 minute, the 50 minute, whatever it is, the daily, the 2-day. Oftentimes, those rejections do happen at the golden pocket 786. And we got a little rejection at the 786, but this now makes this level a very key level to get above. And this is sitting at about $69,514. But there is another key level that we are just starting to lose, which could potentially point towards another dip to the downside. We'll talk about that key level of support, but not only have we hit this key level of resistance with money flow coming out on the 4-day, the 3-day money flow is also technically trending to the downside. 2-day money flow is in the red, and we also have that 2-day red dot, which is something we've been looking at on the live stream to potentially anticipate that next move down if we are going to get it. Keyword is if, because trading isn't if this then that statement. Nobody knows for sure what is going to happen here. That's why as traders, we have to keep both the bullish and bearish scenarios in mind. That way, no matter what happens to price, if we miss a long or we miss a short, we can at least be prepared with those next key levels in mind. So when price approaches those levels, we can identify the price action, analyze it, find those entry triggers, and potentially take a new trade. So not only do we have that Fibonacci level, we have the money flow coming out, the 2-day red dot, and as you can see here on the medium hourly time frames, we also have the 5-hour money flow trending to the downside. The 4-hour money flow actually was crossing into the red yesterday, but has, of course, crossed back into the green, giving a little bit of a mixed signal. So we're in a slightly sticky situation here. However, you know, Market Cypher, in my opinion, as far as money flow goes, is pointing towards something more like an ebb to the upside before getting a rejection to come back to the downside just based off money flow. But if this FOMC meeting gives us a lot of volatility, we can see these indicators get completely stepped on. So I want to give you guys the key levels you must be watching regardless of if we get a pump or a dump. So let's go ahead and pull up that first major range that I'm looking at, and that is coming in here on that range starting in February. When you pull your volume profile to the current price action, you guys can see very well that the volume profiles have been respected here. Every time we deviate above, we look at this as an overvalued asset to look for shorts back into the fair value, which is between the value area high and the value area low. And obviously, every time we deviate from these levels, you can look for a return back into the range, back to the POC, back to the high, deviate once again, and then look for a reversal back into the range, get stuck under the value area high, go to the POC, and then the value area low. And then we got that big slip to the downside, but we have now reclaimed this range and gone to the POC and then back up to the value area high. And as you can see, it did get tapped almost to the dollar, which brings me to the first key level, which is going to be this point of control of this major range sitting at about $67,000. And you guys can see if we're looking at things in terms of volume profiles, we have rejected the high, come back to the POC, and as long as we remain below this POC, guys, we could potentially be in danger of coming down to some lower prices. Now, there are some local levels I'm looking at down here, which I will bring up in just a second, but I do just want to point out, in general, if you are not a day trader or a scalper, the major levels you want to be taking a look at are just the three major levels in the volume profile. So POC is your first key level of resistance at 67,000. If we flip this level, that's kind of the first sign that we could potentially get back up to the value area high and maybe get a deviation above and a breakout. But you want to remember that the money flow on a lot of the medium and higher time frames on Market Cypher are coming to the downside, which could potentially be a warning shot. But if we do wind up seeing some kind of a crazy move to the downside, now the expectation for the FOMC meeting is that the interest rates will remain the same, which if we get something different than that, it could cause giant volatility if they raise rates for some reason, which again, typically the estimations or the predictions are usually accurate. I think they hit like 99% of the time. So, no reason to really expect it to go off script here, but that does happen sometimes. So if we do get a random rate cut or something like that, that could be mega bearish. But if we get some kind of a cut or something early, which that is expected in September, but if we got some kind of shocker, it could be absolutely insane for Bitcoin, sending it off into the moon, which my next major target will be sitting up here. You guys can see we also have this spider line sitting at that 68K level. It's the level that we just rejected. If we do wind up getting some kind of surprise, we could flip that spider line and then go attack those all-time highs, which if we saw a real big move to the upside, you guys, if you watch the live streams, you will know that about $78,000 to $81,000 is that next major target to the upside. But again, as these predictions do hit most of the time, I do think it's probably most likely for rates to remain the same, which could still cause volatility, but nothing really absolutely insane. I would expect, even if we are going to see this wind up being bullish for the markets, I think it will take a little bit of time to play out. But if we do get that move, major target up here at $81,000. But locally, guys, if we get that drop to the downside, your big level of support is going to be sitting down here at $61,600, $61,630, because this is just, simply put, the value area low of the range. And again, if we don't get above that POC, very likely that we could start our journey down there to the value area low. So that's kind of the most bearish scenario that I can see, at least in the medium to short term, unless we see some kind of unexpected news out of FOMC, which could potentially break these levels. And if you guys watch the live streams, you guys will know that the next levels of support are down here closer to the 58 to 59K level, where we have some daily naked points of controls as well as a CME gap. So if we get below the value area low, we do have these last lines of support down here. And then if we lose these, probably looking down towards 51 to 52. But really what I'm looking at today is going to be this major range, as these are kind of the more palatable local levels. But let me bring up some local levels here, guys. I want to pull up the 1 hour time frame, and we did look at these levels last night on the live stream. So if I go ahead and pull that up here, you guys can see I am actually long from the bottom of this value area. Hopefully we can get back up to that $67,300 POC of this local range as we hold this value area low. Doesn't play out 100% of the time, but oftentimes if you stick that low, the next stop for price, if you're going to get a move up, is going to be that POC and then the value area high. So obviously those last levels I showed you were a little bit higher time frame, may take a little longer to get to them. However, as we're looking at these local levels and you're watching the chart as the meeting is happening, these are the local levels of support. If we get a push up, this POC is going to be absolutely key resistance at 67.3. And then if we hop above that, we can look at this value area high golden pocket confluence sitting between 68.2 and 68.4. And that golden pocket confluence does look pretty nice. So I will be looking at this range locally for some scalps if we do wind up getting the setups at those key levels. And then on the low of this range, we do also have that golden pocket confluence with the 786 sitting at $64,871. So if we do slip that value area low, we could potentially just be going for that 786. So this will be another key level that I am watching on the lower time frames. And don't forget, guys, I'll give you some little bonus levels here. There's a lot of different contexts that we can look at this market in, but I do just want to repoint out this volume profile that we have had pulled from the top of the 2021 bull market. We've been looking at this range forever, and as you guys can see, this range is also being respected. You can see as we deviated above the top, we eventually got accepted back into the range, went back to the value area low, back to the high, deviation, continuation, back to the low, back to the high, and now we are seeing a deviation here. So if we are going to see price break back to the downside, this value area high here at 65.3 would be extremely key, because if we lose that level, we may be on the way closer to that $61,000 level, which is very close to the value area low of our current range here, and this is sitting at 61.6, but it is nice to know that that next level underneath here from that previous range is sitting at about 61K. So if we do get that move down to this value area low, we get stuck under the POC. This makes this level very, very saucy to look at for a potential long position if we are not going to fill that 58 to 59K CME gap. And who knows, maybe we do come down, we wick it, we close it, and then we wind up getting back in the volume profile and coming up. So guys, we are seeing some kind of mixed signals here. Like I said, Market Cypher B's money flow could be pointing to some more downside, but with the volatility of FOMC, these indicators can get stepped on a little bit. So if you're out there trading, please, for the love of God, use a stop loss and make sure you're not gambling and you're actually taking sound trade setups that are actually presenting themselves, and you're not just getting into a trade out of FOMO or boredom. So be careful out there, guys. Today, things are probably going to get crazy, but now you have all the key levels. Even if we get the breakout, you have those higher levels of resistance that we can be looking at. And if we get the dump, you know where to be looking for some potential bounces. So with all that being said, guys, I think that's all the time I got for today's market update. Hopefully this helps you guys out. Get these levels on your chart and cross your fingers and hope Bitcoin doesn't dump. That's all the time I got for today's video. I'll see you guys in the next one. Hasta pasta. Frankie Candles out.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah, you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go, yeah, we winning by a landslide.